Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Tuesday, November 25th, 2025. This will most likely be the only video I do for the day. I'm probably going to shut down after this, spend some time with the family. My boys are in town, home from college, and so we're probably going to jump on the boat after this and enjoy the nice weather. Beautiful day down here in Southwest Florida. So wanted to do a quick update. Not really a lot has changed. I'll talk on the video. I had to break that support today, but as I said in Friday's comments, I'm keeping things light. This is a holiday week. Markets are going to close early tomorrow, I believe, before the holiday, and then close on Thursday for the Thanksgiving holiday in the U.S. And again, it's just a week that's usually plagued full of whipsaws. NVIDIA may prove to be one of those. As of now, it's broken down, so I'll get to that. Market doesn't seem to isn't reacting as much as I figured it would. But again, that's a level I'm watching. It's not I imagine it's not a big level to other people. It's one thing I wanted to see collectively. The majority of those MAG 7, 8, 9, 10 stocks break those blue line support levels I gave you a couple weeks back. Now, the bottom line is they still need to very much, both SPY and QQQ have to solidly take out the October 10th lows. That's what I've been harping on until and unless that happens. I still suspect it will. We're not going to go we're not going to go lower, of course. Obviously, that goes without saying. But this is it. So, we had that breakdown of the purple primary uptrend line, that key reaction low, back test, rejection, breakdown of the secondary trend line, back test, and we hit that. Gave you these two near-term targets on the daily time frame, and so basically we're bouncing off the that first initial tag of T1 right there. Back testing or close enough to the 50-day. Let's see where we close today. Let me add semis to my list. So here's what I'm gonna do in this order. Cover this chart, look at the MAG 7, kind of see where they're at. I'll go over my price alerts that have triggered just today. Had a few go off, and somebody asked for an update on the metals or miners. I'll get to that, and I'd like to give you an update on nat gas. All right, so on QQQ, again, not much else to really say there. We're coming up on, this is a 60-minute chart of QQQ. That's the previous high right there. Down to the recent lows, we've now hit that 50% retracement level. Remember, I covered that last week on Friday. Typically, bounces will range from the 38 up to the 61.8% Fibonacci retracement. That, again, is a measure of the previous move. If it is the counter trend rally, this is usually where bounces stop anywhere in that range. Again, it's just a kind of a ballpark. It works out pretty well. And so in some traders, trade exclusively on fibs. I like to incorporate them into my trading. So that's where we're at. We're at the, again, we kissed it about perfectly today. You can see, I think you can see it, purple line. I'll make it a different color. I think yellow you can see well. There it is. So that was today's high. If we go any further, then you have the 61.8 up there. Let's go to price levels. You also have a downtrend line right here off the high on the 60-minute chart right there. And this little near-term uptrend line off the low. Remember, this was a divergent low. As I said on Friday, a lot of things hit support, a lot of stuff. The one thing I'm noticing, including Friday, as I told you, one of the reasons for covering going long, been long, short, long, but now I'm market neutral right now. I'm not doing much this week because of the holidays. And that's what I told you last week. Would kind of go home easy and light and keep it that way for now. That's it. So this 60-minute divergence typically is a catalyst in a bull trend for the move to newer highs. So we'll see if that plays out. But in a bear market, like I said, these things, just as they start to look good and feel like the worst is over after correction, that's when you get the rug pull. So I'm still, again, based on what's happened on the weekly charts, if you're new to the site, to summarize a few weeks back on both SPY, QQQ, as well as NVIDIA, we put in bearish engulfing candles there. Again, in addition to the other sell signals based on trendline breaks and price support. That's QQQ. That's the S&P 500 right there. There's your bearish engulfing. a few weeks ago. Then the trend line break. NVIDIA put one in, as I mentioned, right there, and we're still well below that. We could go on and on. Some key sectors, semis. Let me get to the semis before I go over. Semis also put a bearish engulfing in a few weeks ago, then broke the trend line right there. Again, that's the weekly chart. And just like the markets, they're bouncing. This was that key October support. They ran through it a little bit, but again, they're only going to go so far if the S&P 500 and NASDAQ don't also follow suit. So they snap back up. But what they did do on this is a daily chart. And they're currently doing their testing, and they're still below their 50-day moving average. So I talked about that being usually an important level, especially during trending markets. You don't use moving averages, pay much attention, nor on the oscillators when you're in a choppy sideways. This is a sideways trading range when you're going through the 200s and the 50. But in a trending market, they tend to buy pullbacks to the 50 once it's lost. There was a lot of drop left there after it took out the 50s. It dropped another 9%, and again, just a level that especially recently the semis have been containing pullbacks, and they lost it there. Tried intraday, failed to regain it. That's a red candle, means closed back below, and so that's the state of the semis. Again, a very important sector in the market, but one of many important ones, and the big one is XLF. So as I was saying on Friday, the financials continue to defend their 200-day intersecting 200-day simple in blue, exponential in red moving averages, and that key 5132 price support that I highlighted. So market will not go much lower without the financials breaking down, because they are the second largest sector. So those are the things I'm watching, and we'll see if that happens anytime soon. And if so, that we'll check what the semis are doing, what tech's doing, QQQ, the S&P 500, of course, and all the other stuff. All right, so let's roll into the market leaders. We'll go to QQQ. So NVIDIA, as I mentioned, took out the 179 level, currently below it, and that opens the door for this next target. And then you have the 165.44 level comes in with the 200-day moving averages. Here's the 200 exponential, simple down here. The blue line exponential comes in first. And I still maintain these longer term targets there, which is just a continuation play of that breakdown last year when T1 was hit. And we reversed on the everything on the April 6th lows. This is the recent bearish engulfing candle. So this is the way it, I think it'll play out. Come here, reaction there, and then hit that T2 that was given back here, and go on to hit these targets. If that happens, or even a good part of it, it will take the market down with it, because this is, again, NVIDIA, the largest component of the S&P 500 and QQQ, and just the universe. Center of the universe for the AI bubble, which is, as we all know, it's well documented now, a very, very circular trade. From a fundamental perspective, what I'm hearing is spooking NVIDIA today is Alphabet and Google, and their latest release of the Gemini 3. And I can tell you it's impressive. I have the Gemini Pro subscription, can play around. My son came home from college. He started showing me some of the image generation things it can do now, and it's absolutely sick. Maybe in another video, another time, I'll show you some of the things it created. My sister-in-law, who's in fashion, and just was submitting a proposal to a company, and gave me some sketches. She couldn't get it done on OpenAI. Gave me a few sketches that she had made for some women's articles of clothing. Gave me a few prompts she wanted, and it's just amazing. Again, I'll try to show you what it did with just literally a few single prompt, and then another prompt to get to the next step. Amazing stuff. So, and I'm sorry, so the knockdown, where NVIDIA is, that's not good news for NVIDIA, because Google uses their own created their own chip called the Tensor. And that is supposedly what they're running their AI models on. And it's everything I've been saying for a while. It's a long-term macro call, why I said NVIDIA will ultimately crater, is that you do not continue to reign the sole king of of anything in this day and age. Like I said, I'm surprised the Chinese haven't come out with chips already, and they will. I'm sure they're working on it, especially when we say don't sell them our chips. You can bet your bottom dollar if anybody's gonna. So we said reverse something, reverse engineer anything, or come out with a when it comes to tech. So anyways, it's a matter of time, and then when that happens, NVIDIA is going to start to see accelerating and increased competition. So, anywho, we'll get away from that. So that's that. Let's do the alerts. Yeah, let's go there. Let me pop up my alert list. Historical alert log. I'm doing this in another window. Pop up, bring it over here to this one. And this is just today alone. A lot of these are duplicates. The video was triggered in the morning. Visa, I'm just going to hit these. And again, I do this because it shares trade ideas. Visa is an active trade that just hit our fourth target, as we often do. Just like when we hit my first target here, you bounce, and then hit we hit T3. We kept bouncing off T3. It put in a floor support. In my most recent updates, I said you had uptrend line plus the T3 level, and it would probably be a quick ride down to T4 once we took out T3, which it was. You can see in just about 2 days it took us to get down there, 2-3 days once it was taken out. And now we're bouncing back. So I want to highlight Visa as an objective re-entry. If you took profits on T4 or went long to gain the bounce, it's an objective re-entry all the way right here, because this is that key level. Remember, this is probably the most important, because for months, ever since we broke down here, had these first two sell signals, that has contained all pullbacks until it finally gave way. So if, I thought it was an important level back here before when we shorted it, and now I think the rest of the world, anybody that, could be 2 days into using technical analysis, can identify that as a significant support level. It's so obvious a blind man could see it. So that makes that an objective short entry if it goes a little higher, back test of the trend line or that T2 level. But again, this is where most likely we'll cap the rally. And you also have the key 200-day moving averages. Turn off all these lines right here. The 200 exponential right there, and the simple in blue. So just wanted to update that one again because I had the alert today. UMC, some of these are, it doesn't mean much. Broke down back tests. QQQ had I don't know what time. Maybe short term. If you're trading short term, here's a setup for you. I'm on the 5-minute chart. I've been tracking this uptrend line right here. You can also replicate on the one. We just broke it, and so we also have. This is again for active trading. Been swing trading the Qs. I told you last couple weeks. Just printing money on just active trading QQQ or NQ based on the 5 and 15-minute charts and 60-minute charts. So there's a little wedge, a little breakdown, and these would be your targets. Any of these. Also remember I started the video showing you QQQ is at that, the 50% Fibonacci retracement. So that easily could be the end of the counter trend bounce. So keep that in mind. And then on that 15, 60-minute chart, I'll do a 15 here. I had it on the futures. I don't want to force it. That's probably the best trend line like that. You had a couple reactions there, went through it, and we're back testing. And then, again, this is a 15-minute chart. Now you have negative divergence, just like you had positive divergence at this low that gave us that rally. So there's a case to be to get short, at least for a fade trade. Again, if that's your thing, that's what you are looking to do. All right, let's go back to my alerts, see if I missed any that weren't covering. I already covered NVIDIA, that triggered this morning. Tesla offers an objective short entry or re-entry. Tesla broke below this 412.57 support. Also took out its key 50-day moving average right here. It's been back testing it, still is. That's the yellow line. And, it had two reactions off this 380, 334. So this is the next level that needs to go to open the door for a move down to test this 200 exponential moving average and some really nice price support. In fact, that was T1 from all the way back here. We must have shorted that one there. One of these trend line breaks, and I gave you a total of 6 targets, but T6 was canceled on the April 6 lows when it was time to cover all shorts and go hard long based on the everything covered back at that time. So, and that's, still, point is that was that T1 level. You can see on the way back up, it acted as resistance, and then boom, a very powerful big breakout candle that gave us that whole juice up there. So this is a big level to me, and if I don't already have it, I probably do. I'm going to set a price alert right there, and that's it. So we had a bearish engulfing candle, divergent high, equal high, divergent high. There's a good example. You give it a little room. If you short a bearish engulfing, sometimes they'll just, the powers that be, the nefarious forces, again, man and machine alike, meaning market makers, trading desks, algorithmic trading programs, they know where the stops are going to be. So sometimes they'll try to, I don't even know if you took it out. It looks like an equal high, maybe an intraday pop that didn't hold. So it's Tesla. What else do I have? MicroStrategy, we hit that T2. We're still there now. That just is showing me that we're trying to cross back above it, holding that second target on the downside. AMD, it's interesting. AMD has this uptrend line off the April 6 lows. It's testing right now. It had an intraday move down below. That's also the top of this massive gap right here. You could drive a Mack truck through that gap right there. And so if it pretty much, I think at this point, if it takes out today's lows, you can see it trying to save it here. It's a little doji intraday break. There was an intraday break there. But once gaps are clearly entered, they're usually backfilled, and that's a big old gap to be backfilled. You can see I have first support / target 186.52. Second one is really nice. It comes in with the bottom of the gap around 172.37 and the 200-day exponential moving average. So there's AMD for you, one of the key semiconductor stock. And that reminds me, I'll go over the semis with you real quick too. Okay, back to my things here. AMD, NVIDIA covered, MicroStrategy, I covered a lot of these just kind of because the market's kind of grinding around, since some of these alerts will go up and down through these lines. You get multiple there. This is NVMI, semiconductor stock. It's telling me I had an alert already triggered there on the breakdown, and we're back testing and just got rejected off the line. And you can see a lot of these stocks, bounce, like they bought it on the first drop to the 200-day moving averages. But all this is so far is a breakdown and a back test. So if you get rejected, especially if you take out that recent low, it's going to open the door to these additional downside targets right there. MicroStrategy, I already covered. UNG, I wanted to cover with you. I'm not happy with the recent performance, but longer term, like I told you in recent videos, I'm comfortable with it going down to about this level here, not below there. And at this point, it's probably best not to add unless it gets back above that 14-ish level right there. You can see we hit T2, we had a reaction, pullback. And so that's normal. I thought it was going to get to that escape velocity point once it took out T1, where it just keeps going up without much of a pullback or consolidation. But that's all this is so far. So there's that reaction high. This is the level that it should ideally hold. Anything much below there, you might consider stopping out of that one. All right. Almost done with the alerts. SATS, that one's just flirting with this support level I have here, the 50-day moving average, that yellow line as well. So that one's still above it. TKO, this one has a nice uptrend line and the 200-day moving averages that they keep buying it on. 1, 2, 3. That's the blue and red lines together. And so once it takes those out, that one's probably going down quite a bit. I didn't mark it all the way up, but I had also divergent high on that one. So we just need to take out that trend line with conviction. And the 200 days, which will go together. NVIDIA. Okay, so that's all that. Let's just real quick talk about the semis, because that's an important sector. Like I said, financials are holding up. A lot of stuff's been holding up since late last week, so that's why the market's bouncing. financial successfully testing support. This is SOXX. I kind of think I already covered it. There's the blue line, primary trend line, breakdown, back test. 50's lost, back testing the 50 right now, and still looks to be headed quite a bit lower. And I think I even have some longer term targets for you I shared with you on the weekly chart. Yeah, again, those were the last trade down to T6, the uptrend line primary. That was on the weekly, the final target, T6 in the uptrend line. So this is still a very, very key level. This is your secular bull market uptrend line on the semis. And ultimately, again, a pullback to that would just be a correction, or you can call it a correction if you want, because that's technically all it is. You can use the antiquated definition of a bear market, a drop of 10% or more off the highs. But the semis, 10% is just run of the mill. That would be a 38-40% drop to get back to that trend line again. But if that trend line goes, that's going to have longer term bearish implications. But we're far from it now. So, and kind of a mixed bag in the individual semis today. I see about half of them are red, half are green. Nvidia's down, Broadcom's up. Broadcom recovered that trend line there, but it's coming off a divergent high. Any marginal new high anytime soon? Even this equal high is a divergent high still. Again, divergence isn't a sell signal. A lot of these just need to take out their recent lows. So Taiwan Semi, ASML, coming off still well off the divergent high, holding above the 50. AMD I already covered. Micron. Again, these are all, a lot of these just recently broke down. This is just the first. Nothing goes straight down forever. So far, it's the first what appears to be a counter trend rally. Lam Research, same thing. All these wedge breaks or whatever pattern you had, trend line breaks, and a lot of them hit support and they bounce. That's it. All right, let's cover the metals and miners. Somebody asked for that. There's gold. Gold is just a dead money trade right now. Has been since this peak, this divergent high breakdown right there. Sell signal. We hit my first, second, third. A hair shy of T4. It might have been hit pre-market. I can't recall. It's just a dead money trade. It's moving sideways. That was also, as I highlighted, divergent low. It was a catalyst for this bounce. And so whether or not it hits T5, I just don't know at this point. I suspect so, but a lot of that's going to depend on the US dollar, which just put in a divergent high. The odds for a rate cut just in the last day or two shot up from, I think it was like 30% a couple days ago to 85%. So that's knocked the dollar down. Remember, when any government, when there's an unforeseen or a change in the probabilities of any major central bank cutting rates, that weakens that country's currencies. Remember, the dollar trades not in a vacuum, but against the other major currencies, by far the largest being the euro at 57.6% weighting in the dollar index. But so when all of a sudden our odds for a rate cut shoot up sharply, that knocks the dollar down. So, and you can also see we put in a divergent high. So I still favor my T2 being hit. That just starts to, from a technical perspective, I'm not crazy about this uptrend line, but I just added it here. Either way, we're still above T1. Again, this whole thing, like I said, predicted that would put the brakes on the rally in gold and silver, and it has. Now they're consolidating. So again, if we can get another thrust up to hit my T2 level, that will probably give that one more leg down in gold, silver, GDX. Let's cover those other two. I already showed you gold. And I just, I don't have strong convictions right now because we have all the government data coming back online. A lot of it's incomplete. So you're going to see like a lot of whipsaws probably in the dollar. I'll still maintain that, bullish near-term bias on the dollar and bearish near-term bias on gold, silver, and GDX till the index targets are hit. This is silver I gave you just on the daily chart. One sold target's yet to be hit. And again, these are just dead money trades moving sideways, but here's a trend line I just gave you. If that breaks, that'll probably bring us down. And then GDX, silver and GDX are just going to follow gold. And so just like gold, we had a sell signal there, hit my first target effectively, or, we reversed just shy of T2. And again, this thing's just grinding around. You can see the levels. And again, if gold goes down, if we get that other next thrust up in the dollar, it'll probably come down. T2 at the time was a price support level at about, what did I have that at? 67. And we had this uptrend line here, which now comes in together. So T3 is T2. And the same. So And then let's talk the VIX real quick. The VIX, remember, oh, and one more thing I do want to add in too is my, do an update on my custom NASDAQ Hindenburg indicator. So the VIX, is doing what the VIX does. It's perked up since this most recent divergent low right here, breakout, wedge breakout. We're one up. We've hit my 2862 target twice. Both times pulled back, as I've recently covered. So that's the big level now. That's the level that needs to go. When it goes, usually the VIX in recent years has exploded. So that's the level that's kind of capped these near-term rallies. And this is what the VIX does. When it wakes up after a divergent low, it tends to have, sometimes it has a couple fits and starts about equal to this, and then, that's it. And it goes back down, comes back to the trend line, resumes its, goes back into low volatility mode. But out of, once you get these, the VIX can just wake up. And again, sometimes once it wakes up, like after this divergent low, you get a couple of those pops up to this level, like you did here. And then boom, the big one comes. And the big one being after correction, I'm going to measure it right here. Grabbed a little low, but I'm going to stop a little short just so I didn't move my trend lines. That's about a 250% pop in the VIX in a matter of, what is that, like 2 weeks, a couple weeks there. And when it comes, I can promise you the masses were, okay, we dodged a bullet. The market would have been correcting there. And then that one last drop into the April lows. And so anyways, that's very real possible. I mean, anything's possible. Right now, again, it's Thanksgiving week. I don't know. I don't expect this to pop anytime big this week, but anything's possible. We'll see. All right. So that's it. And so if the market continues higher, if the financials don't break down, if the rest of the mag whatever stocks continue to hold up and rally a little more, you're probably going to see the VIX come on down. Or again, like I said, NVIDIA broke down today. Let's see what happens. Let's see if that breakdown sticks, or if we get a stick save, meaning we come back up and close back above, whether it's today, tomorrow. Again, this holiday, I already told you, how Thanksgiving week is full of whipsaws. That's why I usually just keep it light. It's just like trading between Christmas and New Year's. Good luck with that. It's just plagued with whipsaws, false breakouts, and all that other kind of stuff. Yeah, that's it, guys. Like I said, I'm gonna shut down now. Head out for the day. There's a little breakdown right there. Still hasn't moved. So I'll get this video out if you're active trading and you want to. And whether it's a short-term swing trade based on that 5-minute chart I started with, or the 15-minute charts, or like I said, you believe that we're going to take out these recent lows and get another leg down in the market, this would be a very objective level to add back short exposure, whether it's partial, full. Again, your stops are going to be commensurate with your strat. Are you scaling in, for example? Are you scaling in on the maybe up to from the 38, 50, and 61 fib? That would be a scale-in zone right there. We're at the 50, as I showed you there. In scale-ins, if you're wondering why I'll do that quite often, and I did. Personally, I'm not for swing trades. I did add some here, and the reason I'll scale in, because I don't right now. The clarity isn't as things aren't as clear as they were last week and the week before, when we're playing the 5 and 15 and 60-minute charts like a grand piano or a fiddle, however you want to say it. Right now it's just a little different. And again, financials, a lot of stuff's holding up. Some things are breaking down, so it's kind of that mixed bag, and that's just it's not a very clear near-term direction in the market. All right, so I will wrap it up here, get the video out to you guys, and I'll pick it up if anything big happens today or tomorrow. I'll give you another update. Otherwise, I probably might go dark the rest of the week. So all those of you in the U.S. or maybe overseas that celebrate it, happy Thanksgiving to you, and the rest of you, take some time off. But if you have questions, drop them on the site, and I'll check in if I get time, and I'll reply to any questions that you might have. This has been Randy Finney with Right Side of the Chart. Have a great day.